Hey everybody, welcome to episode 30 of Estate Planning TV. I'm your host, Christopher Small, and this is the internet's most passionate show about estate planning. Thank you for being here. Happy New Year, I think. For most of you, I guess it depends on when you listen to this, but it's always a Happy New Year no matter what it is. Today, to just get right into it, if you're new to the show, you know, this show is all about estate planning. I'm the owner of CMS Law Firm. My goal is to help you live a rich life and leave a rich legacy, right? So we talk about family protection, we talk about estate taxes, we talk about charitable giving, we talk about trust planning, we talk about wills, we also talk about legacy, right? We talk about generational wealth, right? All kinds of fun stuff. Today, though, we're going to talk about something that a lot of people, I think, place as a high priority, but there's this hidden truth that we're going to talk about today that I typically sort of puts things in a little bit of a different perspective for people when it comes to estate taxes, okay? So today we're talking about sort of the hidden truth about estate tax planning, all right? If you are not in Washington State, then your estate tax, and well, there's a couple other states, but if you are not in Washington State and you're watching this video, you need to make sure that you Google sort of, are there state, whatever your state is, estate taxes, okay? If you do not have state estate taxes, and depending on when you listen to this, I guess otherwise, the federal estate tax level as of today is like $22.4 million if you're married. $11.2 million if you're single. So if your assets are under that, you don't even really have to worry about estate taxes. Unless you live in a state like Washington, which has its own estate tax that starts for 2018 at $2.193 million. So everything over $2.193 million of your net worth, of your assets, which would include life insurance proceeds, retirement accounts, your house, investment accounts, everything, you start to pay estate taxes. So what happens to me frequently is that people come into my office and I start talking about, what are your goals? What are you interested in? And typically it's, I want to take care of my kids. I want to take care of my spouse, my significant other. I want to do X, Y, Z. I want to make sure that I give some to charity. And then inevitably, if they have any sort of net worth, substantial net worth, the topic of conversation moves to estate taxes. And what happens often for me is that the estate tax conversation is relatively short, but informative for them, I think. And the reason is that this hidden truth always comes out. And once people are kind of exposed to this, then the estate tax picture or estate tax strategies begin to kind of lose some of their appeal. And you're going to find out why. So the thing about estate taxes is it is possible to completely eliminate your estate taxes, okay? You could pay zero estate tax. But to do that, you have to essentially give up control over that portion of your estate. And by give up control, what I mean is not be able to really access it if you ever need to. Now, there are some different things that you can do sort of within this realm to give yourself some limited access, but most people that come into my office have some assets that could be subject to estate taxes, but not so much that they want to just sort of stick it over here and just hold it for future generations. Part of that is age, right? Part of that is their investment philosophy, but there are some reasons that you would not, people are hesitant, I guess, to give control over their money. And that's what you really have to do when it comes to estate taxes. Now, if you are married, it is possible to take your 2.193 and essentially make that $4.2 million estate tax exemption with some relatively simple trust planning. And that little piece, I encourage almost everyone to do that's married, that qualifies for that. Because it's relatively easy. You basically pay, $1,000, a couple $1,000, and you can save $150,000. Okay, so if I made you a deal where I said, hey, You give me $2,000, I'm going to give you $150,000. Most people would take that deal. But when it comes to anything over that, you really get into that scenario of having to give up access over and control over your money to keep it out of your estate so that it's not taken into account when that estate tax equation is being calculated. So that's the hidden truth of estate tax planning. Sorry. Hope that doesn't hurt you in your feelings or burst your bubble or whatever. Now, there are some strategies and some things that you can do over time to reduce your estate tax burden. You can give $15,000 away to as many people as you want over time. There's one other strategy that I talk to people about frequently that we'll talk about next week in detail because it deserves some more time. But think about estate taxes to sort of break it down one more time in sort of a little bit of a different way. When you die, what happens is you sort of combine all of your assets, okay, into this pool, and then you just there's a number, right? And in Washington State, it's $2.193 million, and anything over that number gets taxed. So the way that you can avoid or eliminate estate taxes is to try to reduce what's in the pool, and the way that you can reduce what's in the pool is to just, quite frankly, take it out of the pool, kind of stick it over here, right? If you stick it over here, it's outside of the pool, but while you're alive, you can't touch this stuff over here, okay? And you can't separate it from the pool once you're dead, okay? You got to do this beforehand. So what you'll see often is people, as they get older and as their financial picture and their financial needs become more and more clear, that's when the estate tax planning and the estate tax preparation can really sort of begin to take effect. Because you can say, all right, look, I need this much. I need a half of my pie. So the other half of the pie, I want to start thinking about how to grow that and use it, and not have to pay Uncle Sam all this money for it. And that is when estate tax planning strategies come into effect. So you can stick it over here, and you can have the income or a little bit of a percentage sort of kick back to you over time, right? And then the rest of it stays out of your estate over here. You can give it to charity like that as well. Big chunk over here. Some of it gets kicked back to you over time, and then the balance goes to a charity. You can if you live long enough and do some other strategies, and couple that with some strategies, you can just sort of put it over here and just leave it, right? And eventually it will be considered not to be a part of your estate. But there are a whole bunch of different things you can do that are fun. You can also look. The strategies are endless. You can create a sort of a family business, and you can start to give shares to the business over time, and that will reduce this pool and increase this pool. So I guess the point though is, when you're thinking about estate tax planning, serious planning, not sort of the basics, you're going to have to be willing to give up control and access to some of your assets. If you're not willing to do that, then it's just you're going to have to wait until you are. Okay. If you don't know if you're willing to do that or not, I would encourage you to talk to a financial planner. I know a bunch of people. I can recommend you to someone. You can find someone you probably know in your network. But that would be another step that I would do before you start thinking about estate taxes is, am I going to have enough money to live on? Because if you put this money over here and you need it later, you cannot get it. Okay? It is out of your estate. Okay? It goes into irrevocable trusts. And irrevocable means, for the most part, you cannot revoke them. Okay, even if you hear about defective trusts that are irrevocable, the defective part doesn't mean you can snatch back some of your money. It's just an income tax strategy. So, on that note, I think that's plenty of information that I'm giving you. The main point again that I want you to remember is that when it comes to estate tax planning, once you get past the basic estate tax strategies, to really see the benefits of that, you're going to have to be willing to give up control and access to some of your assets. Assets. It's assets, right? So anyway, that's it. Once again, I'm Christopher Small with CMS Law Firm. I really appreciate your time and attention. If you're, for some reason, if you're listening to the podcast, I would love for you to give me a review, whether it's good or bad. The more reviews that I give, the more people can find this, the more people I can help. So if you are listening on a podcast, click the review button and leave me a review. If you have questions, you can email me, chris@cmslawfirm.com. You can call me 206-659-1512. That's it. Once again, Happy New Year. And I'll be in your ear again in a week. See ya.